sudden silence that shook the financial world. They expected a powerful debut. Ontario, Canada's financial powerhouse, was about to issue a $2 billion US dollar bond. News outlets were primed. Wall Street was watching. But when the dust settled, something was missing. No US banks. Not a single one. No Goldman Sachs. Not JP Morgan. Not Morgan Stanley. Instead, the deal was led by Barclays from London alongside Canada's champions, RBC, CIBC, Scotiabank. It wasn't an oversight. It was a thunderous statement. In one bold stroke, Canada's biggest province ripped away the anchors of American financial dominance and flashed a global warning. The ripple from Alberta. In March 2025, Alberta dropped a bombshell. They issued a 1.225 billion, yes, 1.225 billion bond in euros, ignoring Bank of America, a long-standing player in their finance game. That wasn't a glitch, it was a message. Canada's Western heartland had found a new route to Europe's money tables. Picture this. Alberta's pension managers, who once flew to New York or Toronto, now board flights to Frankfurt. Their spreadsheets pivot from USD to euros. Their power brokers appear at Frankfurt roundtables, not Wall Street luncheons. This is seismic, a province rich with oil, built on North American connections, quietly rerouting its financial lifeline to Europe. Canada was sending a message. We're cutting ties with US banks. Why? Because Canada is building pipelines for energy and for money that don't run south. Quiet rebellion, then comes Ontario's hidden revolution. On March 4, 2025, Premier Doug Ford signed a rule applying across the province. No US-based company could win government contracts, schools, hospitals, even cleaning services, unless no other choice existed that wasn't temporary politics. That was strategic defiance. Ontario doesn't just use Canadian banks, it demands Canadian suppliers. US companies went from eligible competitors to off-limits overnight. Ontario's move ignited a wave. British Columbia doubled down with its own Buy Canadian rules. Quebec followed with supply chain audits. Across provinces, a quiet shield was forming, one built not in Parliament, but in finance and procurement. And what did they target first? Bonds, contracts, banks. Before anyone shouted trade war, Canada had already redrawn the financial map province by province without firing a single shot. A historic break. Think about this. Ontario hasn't issued a US dollar bond without American banks since July 2011, nearly 14 years ago. That long-standing tradition wasn't just outdated, it was foundational. US banks, like Bank of America, Goldman Sachs, and JP Morgan, were fixtures on these deals, not just for funding power, but for prestige and global market access. They brought deep liquidity, institutional credibility, and connections across international investor networks. So, when Ontario flipped the script and chose Barclays, UK, along with Canadian giants BMO, CIBC, and Scotia to lead the $2 billion Yankee bond, it was seismic. This wasn't a subtle industry shift. This was Canada's largest province saying, "We don't need your banks to raise capital," in a market still dominated by US dollars. In addition, it was Ontario's first US dollar issuance since launching a $3 billion bond in January 2025, just before Trump's inauguration, with American banks on board. Now, 5 months later, they've vanished from the syndicate entirely. This moves far beyond finance. It's political tectonics. Ontario is laying out a new map for Canada's future, sidestepping traditional US banking avenues to redesign its economic identity. And make no mistake, It's sending a clear signal to Wall Street and to Donald Trump. Before we go further, only 3 out of every 100 people who watch our videos subscribe. If you're one of the 97, hit that subscribe button now. We break down global events you won't hear on mainstream media, but it only works if you're with us. Why this matters to you? This isn't Wall Street drama. It's your world. The value of your travel currency could drop. Your mortgage options might shrink. Your job might depend on infrastructure, your government funds. These aren't distant shifts. They're impacting daily lives. Alberta's bold shift. In March 2025, Alberta sent a shockwave through global finance. The province issued a $1.25 billion euro-denominated bond, without Bank of America breaking a 6-year streak of using US banks for such massive deals. This wasn't a glitch, it was a strategic pivot. Why it matters? Major shift in allegiance. Alberta now taps into European liquidity pools, connecting with Frankfurt and London instead of New York. That's new financial geography. Pension managers who once flew to Wall Street meetings are now boarding flights to Frankfurt, sharing boardrooms with European decision-makers and forging new alliances. But there's more beneath the surface. Behind the headlines. AIMCO shake up. In late 2024, Alberta's ruling party made another bold move. They dismantled the entire board of AIMCO, the powerful $160 billion pension fund manager, citing poor returns. Former Prime Minister Stephen Harper was appointed as unpaid chair in a clear show of force. What this signal? The province is taking strict control of finance and capital. Their message: traditional power structures do not rule here anymore. Why the shift is bigger than bonds? Pension reorientation. AIMCO's reorganization reveals that financial power in Alberta is being redefined from the inside out. In pipeline and export alignment. Major infrastructure projects were already retooled to export oil to Asia, not the US, and these euro bonds help fund those new routes. What it means for Canadians and investors: this isn't passive finance, it's active economic policy. Focus area before now. Canada, especially Alberta, is rewriting its financial narrative province by province, forging a future independent of US hegemony. Emotional power line. This is more than charts and spreadsheets. It's about independence, identity, and agency. Alberta's financial pivot isn't just money, it's hope for autonomy. For investors and global travelers, it shows a country unafraid to step off the beaten path and build a new trajectory. Stay tuned, because Canada's quiet revolution is being written €1 bond at a time. If you're planning overseas trips, now is the time to carry a multi-currency RFID blocking travel wallet. Link in the description below, because cross-border banking just got more complicated. And hey, what do you think about Canada banning US banks from its bond deals? Overreaction or strategic genius? Drop your thoughts in the comments. We read every single one. Deep ties, new paths. Canada and the US are still deeply connected, almost like an old friendship stretched across time. American investment in Canada sits at a massive $618 billion, pouring into energy, finance, technology, infrastructure. Meanwhile, Canadians have funneled over $1.7 trillion into US companies, chasing growth in Silicon Valley, Wall Street, and beyond. But here's the twist. This isn't the story of separation. It's the story of rerouting. Picture 2 trusted roads between Canada and the US. Highways once paved smooth by US banks, American lenders, and deep Lincoln-centered money. Now, Canada is building alternative lanes, veering through London, Frankfurt, Singapore, with euro and yen-denominated routes, bypassing US strongholds. Why this redirection matters. 1. US dollars still flow, but now via Europe and Asia. 2. Banks once in the driver's seat, like Bank of America and Goldman Sachs, are being edged out of underwriting bonds and public deals. 3. It's not breakup, it's a makeover. Canada is saying, we want deeper ties, broader options, not just loyalty. The money vanishing, they're losing more than pride. American banks are bleeding cash. When Ontario and Alberta shut US banks out of their bond deals, it cost those banks real money. Bank of America, Goldman Sachs, JP Morgan, these behemoths were suddenly stripped of underwriting fees worth tens of millions of dollars. That's not pocket change, it's a financial gut punch. Why underwriting fees matter. Underwriting isn't just a line on a spreadsheet. It's a symbol of power. Every major bond deal carried status, not just revenue. Not being invited isn't just lost income. It's a diminished role, a retreat from the front lines of global finance. Those fees also stand for leverage. Less revenue means less influence, smaller clients, weaker relationships, lower status at the capital markets table, emotional core, losing the chair at the table. Imagine hosting a big party. For years, you invite the same VIP every time. But this year, you don't. That's what's happened. American banks are no longer welcome at Canada's most important financial gatherings, and that stings. The seats are still at the table, but now filled with other faces. And for US banks, it's not just missed profits. It's a hit to pride, presence, and future opportunity. In short, Canada didn't just reroute money, they starved US banks of influence. Each deal chips away at power, one fee at a time, traveling abroad or doing cross-border business. Consider a multi-currency RFID travel wallet, check link in description below. It's a small shield in these shifting times. Markets stay calm, but the ground shakes. On paper, it looks peaceful. Bond prices barely moved when Ontario and Alberta shifted gears. Borrowing costs, measured by spreads, hovered near long-term averages. According to Bloomberg and bond markets, Ontario's sudden $750 million bonds didn't spike even under trade pressure. That calm cover is misleading. The financial ground is trembling beneath. Investor behavior changed, but demand stayed high. Money found a way in. Spreads remained tame, yet who earned those spreads completely shifted. US banks saw little or none of the underwriting rewards. So yes, markets are outwardly calm, but their hidden wiring has been rewired. Invisible new routes, the old financial highways between Canada and the world, have been quietly redirected. 1. Syndicates shift. Ontario and Alberta now tap underwriters in London, Frankfurt, Singapore, not New York. 2. Euro-denominated swaps. They're embracing ECB-linked tools, not just Fed-based swaps. 3. Investor appetite adapts. European bond buyers are filling demand left by US bank withdrawal. 4. New benchmarks emerge. With Alberta's $1.25 billion euro bond joining benchmark markets, the order book hit $3.9 billion across 95-plus accounts. 5. Strengthening European infrastructure. As Europe rebuilds its securitization market, Canada is ready to plug into its depth. Why it matters, it may not look dramatic, but these are quiet revolutions. Redefined alliances. Canada's capital now needs Europe, and Europe stands ready. Feigned stability, calm spreads mask deep structural change. Locked-in resilience. Once new systems take shape, going back isn't easy. Emotional impact. Imagine watching a mountain river shift course. The water still flows, but it's carving a different path. The banks The big institutions have lost control of the flow, and in the distance, new channels are forming. That's what Canada's financial pivot looks like. A whisper, not a roar, but turn your back and it's too late. For global investors, consider a small fireproof document bag, check link in description below, because redrawing financial maps can get messy fast. Risks on the horizon. This new strategy comes with hazards. Tougher environmental ESG reviews, slowing oil and pipeline deals, shorter banking hours for Canadians in US markets, small companies delaying expansion plans. The stakes just got higher. Real lives impacted. A Montreal insulation company paused its Ohio expansion. Not tariffs, but worry about credit freeze. A hedge fund in Boston quietly hedged Canadian assets, bracing for a 5-year global shift. Meanwhile, banks in Frankfurt and book runners in Singapore quietly picked up Canada's slack. Symbol or shift. If US trade policies soften or a new deal is signed, Canada may return to US banks. But provincial governments are already partnering with London and Hong Kong, not as backups, but as co-leaders. Global finance still rules. The US bond market is still $60 trillion strong. Canada still uses Fed-linked swaps, but European and Asian systems are now operational, and they're not going away. The mountain metaphor. Think of Canada's system as a mountain. US banks are the snowcap, melting, shifting. Yet the rocky base, trade, infrastructure remains. Only the streams are being rerouted. If this opened your eyes, hit like, subscribe, and ring the bell. Stay ahead of this global shift. Looking ahead, Canada's next steps need major export pipelines to Asia and Europe, strong domestic finance hubs, independent money flows, even from the US. If these fail, today's wins could turn into tomorrow's losses. Next-gen Canadians are going to Berlin, not Boston. Tech startups are sprouting in Lisbon, not LA. This isn't just money, it's a shift in dreams and direction. There is also a new kind of conflict. It's not war, no bombs, but there is a quiet Cold War with money, markets, and rules. Wall Street still holds power, but Canada just dealt its ace. Are you feeling the impact? If this matters to you, like, subscribe, and hit that bell. Be part of a community thinking forward. What's your verdict? Is this bold or reckless? Comment below, we read them all.